Crypto market, especially retail and institutional investors, Project Crypto, which SEC Chair Paul Atkins unveiled on July 31st, 2025, and what it means for the U.S. crypto market, especially the retail and institutional investors. What is Project Crypto? A commission-wide initiative announced by SEC Chair Paul Atkins to modernize securities rules and enable on-chain markets in the U.S. Built around the recommendations from the 160-page President's Working Group report, including the Genius Act and other legislative priorities, aims to transform the United States into the crypto capital of the world by fostering innovation with clearer guidance on custody, distributions, trading, and token classification. Key objectives and areas of focus. 1. Token classification. Establish clear rules to determine whether crypto assets are securities, commodities, stablecoins, or something else, addressing confusion over the HOULY test. Chair Atkins emphasized, most crypto assets are not securities, reversing prior SEC assumptions. 2. Distributions. Airdrops and ICOs will propose purpose-built disclosures, safe harbors, and exemptions for ICOs, airdrops, network rewards, allowing legal participation in developing US-based token launches. 3. Tokenized securities, designing a framework for on-chain stocks and funds, enabling tokenized securities to trade under US regulatory umbrella. 4. Custody and licensing reform. Updating custody rules for crypto assets and supporting super app models, where brokers, lenders, staking platforms, and exchanges operate under a single unified license. 5. DeFi integration. Establishing regulatory clarity for decentralized finance participants, distinguishing between code providers and intermediated services, what it means for retail investors. You might not be drafting the SEC's new rules, but here's what you'll likely see. Greater access to US-based crypto services, more regulated ICOs, airdrops, and token offerings accessible to US residents, improved investor protections. Standardized disclosures and regulatory safeguards built into new frameworks should reduce scams and provide greater clarity, lower costs, and more innovation. As firms relocate or launch within the U.S., competition could drive better services and pricing across exchanges, custody solutions, and platforms. Fusion of on-chain and traditional finance. Expect tokenized stocks, bonds, ETFs, and other assets that blend DeFi with regulated structures to become more widely available. Regulatory clarity means stability. Clear rules around token classification, e.g., when something constitutes a security, reduce legal risk and uncertainty. Timing and caveats. These rule proposals still need public comment, and implementation could take many months. While SEC is acting, Congress is also considering legislation, like the Clarity Act, potential overlaps or delays possible. Full effect depends on forthcoming final rules, court decisions, and clarity across agencies like the CFTC for non-security tokens. Summary: Project Crypto is a paradigm shift in U.S. crypto policy, moving from enforcement-heavy to innovation-forward regulation. Its success could unlock U.S. crypto capital formation, draw firms back from overseas, and create fresh opportunities for retail investment and access.